They say if you control the money, you control the world. But what if one company didn't just control money? It controlled how money is moved, where it flows, and who benefits from it. This is BlackRock, the silent giant with its hands in almost every pocket of the global economy. $10 trillion under management, millions of investors, billions of transactions a day. But what's the story behind this quiet empire? Grab your coffee, because what you're about to learn about BlackRock might change how you see your own money forever. Behind every brand that changes the world is a human story, an idea born from failure, resilience, and obsession. BlackRock didn't start as a monolith. It began with one man's humiliating mistake, a stubborn dream, and a team willing to gamble everything to build a fortress against financial chaos. Today we dive deep into the secret rise of BlackRock and reveal what you and I can learn about risk, reinvention, and the price of becoming too big to fail. To understand BlackRock, you have to meet its architect, Lawrence Douglas Fink, or as the financial world calls him, Larry Fink. Born in 1952 in sun-drenched Van Nuys, California, Larry didn't come from Wall Street privilege. His dad owned a humble shoe store. His mom taught English. Money wasn't abundant, but lessons were. Larry learned early that money doesn't respect you just because you work hard. You have to understand it, control it, and plan for what you can't see coming. At UCLA, Larry didn't follow the typical finance track. He majored in political science, fascinated by how systems and people interact. Later, his MBA focused on real estate, a world where billions can evaporate overnight if you miscalculate risk. Little did he know, that lesson would come crashing into his life, changing everything. After grad school, Larry landed a job at First Boston, a respected investment bank. It didn't take him long to stand out. He dove headfirst into the wild frontier of mortgage-backed securities, back then, a risky new playground where banks bundled home loans into tradable investments. By 1986, Larry's division was printing money, over $1 billion in profits. He was the golden boy of First Boston. And then, disaster. One bad bet on interest rates wiped out over $100 million. For Larry, it was public embarrassment, a Wall Street wunderkind brought to his knees by a miscalculation. But instead of running, Larry did what few do. He studied the wreckage. He realized that most firms flew blind, reacting to market swings instead of anticipating them. If he could find a way to see risk clearly, to model it, manage it, and control it, he could build something no one else had. In 1988, Larry and 7 co-founders walked away from their cushy jobs to build a new kind of asset manager, one that didn't just chase profit but obsessed over protecting it. They called it BlackRock, a name chosen to reflect the bedrock principles they stood for: stability, strength, and resilience. Their vision was radical: combine cutting-edge technology with human expertise to help investors not just grow their money, but protect it from the chaos no one sees coming. The first investor to take the risk? Blackstone Group, giving BlackRock its first lifeline and a crucial vote of confidence. But money was just step one. Convincing skeptical clients was the real war. Back then, Wall Street titans sneered at the idea that computers could outthink seasoned traders. But Larry knew the future wouldn't belong to hunches, it would belong to data. So BlackRock poured its energy into building Aladdin, short for Asset, Liability, Debt, and Derivative Investment Network. A mouthful, sure, but revolutionary. Aladdin didn't just track assets, it analyzed trillions of data points, stress-tested portfolios for worst-case scenarios, and gave investors something priceless: clarity in a market that thrives on confusion. Early clients were hesitant, but when they saw that Aladdin could flag risks before headlines hit, the tide began to turn. As the 90s rolled in, BlackRock quietly gobbled up market share. They started with fixed-income assets, traditionally seen as safe, and expanded into equities, mutual funds, and later, the fast-growing ETF market. Aladdin was the not-so-secret weapon that made it possible. By the early 2000s, Aladdin didn't just power BlackRock, it powered hundreds of other institutions too. Competitors were using their rivals' brain to run their portfolios. It sounds absurd, but in finance, trust trumps pride. If your competitors' tools are the best, you use them. Then came 2008, the global financial apocalypse. Banks collapsed, trillions evaporated, pension funds dried up. It was chaos. But while others sank, BlackRock's obsession with risk made it the safe pair of hands everyone suddenly needed. Governments called, banks called, entire countries asked for advice. BlackRock helped clean up the wreckage, managing toxic assets no one else wanted to touch. The firm earned enormous fees, and even more priceless, trust and influence. When the smoke cleared, BlackRock wasn't just another player, it was the player. In 2009, BlackRock made a move that shocked Wall Street. They acquired Barclays Global Investors, snagging the crown jewel of the ETF world, iShares. Overnight, BlackRock became the biggest name in passive investing, a market that would explode over the next decade. Ordinary investors loved ETFs for their low fees and simplicity. BlackRock's slice of the pie grew into a mountain. By the 2010s, BlackRock was no longer just an asset manager, it was the largest of its kind the world had ever seen, with more money flowing through its digital veins than the GDP of Japan, Germany, or the UK. So how did they keep growing? Culture. Larry Fink instilled an idea that innovation isn't optional, it's survival. Every hire, every division, every new product had to align with the core mission. Control risk, embrace technology, protect trust. They weren't flashy, they didn't make headlines for wild bets, they made headlines for avoiding disasters that wrecked others. If you've ever invested in a retirement fund, an ETF, or a pension plan, chances are BlackRock had its fingerprints on your money, whether you knew it or not. But being that big means you attract it. Critics argue BlackRock is too big, its influence too sprawling. How can one company advise governments, run massive portfolios, and push corporations to embrace sustainability, all while remaining neutral? Some politicians call it the shadow bank. Conspiracy theorists whisper that it manipulates markets behind the scenes. In reality, BlackRock's power is less cloak and dagger, and more about scale. Their size gives them leverage to demand changes. In recent years, that's meant pushing companies to focus on ESG, environmental, social, and governance factors. Larry's annual letters to CEOs make headlines. They read like manifestos for stakeholder capitalism, insisting companies must serve not just shareholders, but society at large. To some, that's leadership. To others, it's overreach. So why should you care? Because BlackRock's story is your story, too. Your pension might be managed by BlackRock. Your ETF? Probably an iShares fund. Your government's recovery plan could have BlackRock's fingerprints on it. Understanding BlackRock means understanding how your money, and the world's money, actually moves. It's a reminder that the real game isn't just about making a fortune, it's about protecting it, managing risk, seeing the storm before it hits, and having the data to navigate through it. Larry Fink's billion-dollar mistake at First Boston wasn't a failure, it was a lab. That meltdown sparked a model that made him one of the most powerful financial architects alive. His story proves: 1. A catastrophic loss can be the seed of your biggest breakthrough. 2. If you're not using tech to see what others can't, you're already behind. 3. Control risk, and you control opportunity. Today, BlackRock faces new storms, climate change, geopolitical tension, and the backlash against being too big. But its leadership keeps pivoting, investing in sustainability, digital finance, and global policy influence. No one knows how the next crisis will unfold, but history says BlackRock's story is far from over. And whether you like it or not, when BlackRock moves, the rest of us feel the ripple. So, what do you think? Is BlackRock a guardian of stability, or a shadow giant too powerful to fail? Let us know in the comments below. If you love discovering the hidden stories behind the brands that shape our world, smash that like, subscribe, and ring that bell icon so you never miss a deep dive. This is Behind Brand Success, and we'll see you in the next story.